Still in the thick of earnings, let's address another set, PNB Housing. We've got Girish Kousgi, the MD and CEO, joining in on the show right now. Girish, hi, morning. Good to have you on the show. You've posted retail loan growth of about 12% in the second quarter, as opposed to 11% in the first quarter. Are you still sticking by with your 17 to 18% growth guidance?
Good morning, Aisha. I think we had a very good quarter two. We stick to our book growth guidance of 17 to 18%. So as I had mentioned earlier, first we will catch up with disbursement and then the book growth would follow. If you look at quarter two, obviously, on retail, the growth is about 18% on disbursements, and not just on disbursement, even the logins were about 31%, sanctions up 30% on a YOY basis. So we stick to our guidance of both disbursement, which is 22+% growth over last year, and book growth of 17 to 18%.
Yeah, that. The highlight of your second quarter, I think, was the resolution of a major NPA account worth about 784 crore rupees. From here on, where is the asset quality headed then?
I think if you look back in last 1 year, the GNPA was about a little over 6%. Now it is 1.78. So as I had mentioned earlier, every quarter we will see improvement in asset quality, both on retail and corporate. Now corporate is now almost done. We have just one account, which is about 68 crores. So corporate, which used to be about 33% GNPA, is now down to less than 3%. And on retail, now it is 1.74. So I think going forward, every quarter we will see improvement on the asset quality. Maybe in next 3 to 4 quarters time, we would like to be one of the best and comparable in the entire housing finance industry on the asset quality.
I wanted to also understand whether or not you're taking additional write-offs in the second half from the reversal in provisions like you did in Q2?
I think largely our strategy has been to work on actual collections in terms of cash and settlements. However, since we had resolved one large corporate account in quarter two, and therefore we had to write back, so we thought we would strengthen the balance sheet, and therefore we had technically written off. So I think our focus in future also would be in terms of reducing GNPA. Largely the focus would be on collections, but if there is a need, I think we can always look at it.
Okay, fair enough. And what are typically the yields that you charge in affordable housing?
I think for us, affordable is a great story. I think it's now 8 months that we started. We have reached a book of 750 crores, and very shortly we will hit 1,000 crore mark, and probably will be one of the fastest to reach a book of 1,000 crores. We are seeing a lot of traction on affordable. I think every quarter we are seeing disbursement growth of about 65%. So there is a good story which will pan out for us going forward.
Cost of funds, Girish, you think they've peaked out for you? And do you think that, given the potential credit upgrade and, of course, possibility of eligible for low-cost NHB borrowings as well?
Oh, yes, I think this year we are eligible. We are working with NHB for funds. So that would come in, and obviously the cost would go down from the current level.
And what's the NIMS trajectory that you expect given this outlook?
I think on cost of funds, I think it is almost flattened. Now we are at about 7.99% in cost of funds. So there could be little reduction from the current level. I think by and large, our focus is to build more profitable book. We do two types of business. One is prime and second is affordable. On prime, we are slowly moving towards more profitable book building. On affordable, anyway, it's been a great story. On the corporate side, it was a conscious call to degrow the book till we resolve and then restart. So I think restart is now, I think very soon we'll be able to restart in about, let's say, 2 to 3 quarters time.
So what is the long-term growth target when it comes to corporate lending?
No, I think corporate, we would always do business more from a strategic point of view. The idea of corporate is that, when we restart, we will be focusing on select developers, select projects in select locations. We would focus only on construction finance with a retail linkage. So the idea of doing corporate is more to enable retail growth.
Okay, fair enough. And what would be the outlook on your loan mix? How is that going to evolve between prime, affordable, and the corporate lending segments?
So, in fact, I had mentioned this earlier. Incrementally, by this year end, we'll be able to reach about 10% of disbursements coming in from affordable. We are already at about 9%. I think we might reach the 10%. So, affordable would grow at a much faster pace compared to prime. I think incrementally, we should get to a stage of about, let's say, 60 to 40%, 60 from prime and 40 from affordable. But of course, this will take time because given the ticket size on affordable and the effort which needs to build up affordable, it will take time. But I think that is the mix what we are looking at. If we look at the overall portfolio, when we restart corporate, and corporate at its peak would always be less than 10%. And out of the rest, I think ideally we would like to reach 60% on prime and 40% on affordable.
All right, good to have you on board. Thank you for walking us through your growth targets as well as outlook. So 17 to 18% retail loan growth guidance, and talking about how the corporate NPAs have declined to less than 3%. PNB Housing just about breaking into the green at 716. Time for a very quick break then right here on the show. Stay with us for lots more Corporate Voices.